What is happening with the US dollar and how could it play out for Bitcoin and gold as well as the markets more generally? Hi, everyone, and welcome to another Visionaries Club community chat where our aim is to leverage the expertise of our community to discuss the current pressing issues and come to some conclusions. Today, welcome back Tyler, who's put together a fantastic presentation on his current thoughts on where we are, basically through his analysis framework. And this was sparked by a question from the community member, Chamber of X, who was really wanting to know a little bit more of Tyler's thoughts on really his Elliott wave process and also just how he was seeing the markets more generally. And it's good to get these answers in text form, but it's difficult to get that deep dive. So we thought let's dig in again on camera and actually go through those charts in a bit of detail, which is difficult to do any other way, I've found. And we've also invited our Ainslie Bullion and crypto and the gold and silver standard community to watch as well, as I know they'll be really interested in some of the key points being discussed here. So thank you for all this. And how are you going today, Tyler?
Doing very well.
So
this time it's morning your time and the evening.
I know we've inverted it this time. I'm like, oh, this is
this time
we're figuring out this international time zone thing. It's coming together.
Pretty much.
Yeah. So do you want to maybe start us off with the big picture of what your view is? Because I know you've sort of got a bit of a framework around this of how you're thinking about it. Do you want to maybe start us off with that big picture view, and then we can dig into the weeds a little bit from there?
Sure. And as you were mentioning, if I share my screen, this all kind of got started with a discussion back and forth in our Discord group. And I basically had mentioned that I felt like the dollar had probably topped over here, a local top, and it's probably reversing. And I said there is an alternative count that I have where the dollar goes much higher, but I didn't want to draw out the pathway, mainly because I didn't see it likely happening. And obviously that vague comment led one of the people in the group to start asking why not, and could you explain yourself further? So that's kind of how this whole interview got started. So before I go into analyzing the dollar chart, I think it's important to realize that even though I use Elliott wave as an analysis tool, I usually look at the big picture first. And for me, the big picture, when it's coming to the dollar, is basically looking at global liquidity as well as interest rates, right? So what I would like to do before I do all the analysis is to look at the big picture framework that makes me make decisions regarding how I will do my counts and whatnot. So the first thing that I want to do is I want to look at liquidity, right? So obviously we go to Michael Howell, the master of global liquidity. And if you see, this is his global liquidity index. It looks like things have bottomed in early, I can't tell here, late 2022.
About October, yeah, late last year, yep.
So it looks like it's kind of going up. In a more detailed view, if you look at the annualized thing, it's kind of going up. But if you look at the 3-month annualized, it went up and then it's going a little bit down, right? But as you shared with us from your latest report from Michael Howell, it looks like all the central banks are kind of, pumping in more liquidity with each one. The Bank of England has been going down. I mean, it's hard to say if it's absolutely bottomed, but if all the others are kind of going up, probably in the end, this will also go up. And if you look at the heat map over here, the way I understand it is green is they're pumping in more liquidity, red is when they're taking out.
Yep.
And if you can see, basically each one, with the exception of the Bank of England, the colors are getting lighter. And if you look at the aggregate, it's lightening up even more, right? So for me, this is the backdrop. I feel like the global liquidity situation, I think you mentioned it in the summary that you gave us, that they're pumping in liquidity, but because the MOVE index is going up, that's lowering the value of the bonds, so it's kind of having a counteracting.
Yeah, and I might just add a little bit more color around that. So that's my understanding as well. If you look at that European Central Bank one, for example, if you looked at that just a week or two ago, it was looking absolutely abysmal. But we've got that sharp spike up that's happened just in the last week. So I think my interpretation of what Hal was sort of saying around this was that you're already starting to see liquidity coming back in from the central banks, which is what we can see on that chart there. All of those are actually pointing up. Even the Bank of England, like you said, it's hard to say if it's not pointing up very strongly, but it's certainly not still heading sharply down. But the difference he's concerned about is because we've seen such a drop in the price or the value of bonds, that is a big part of the total picture, and that underlying value of that collateral in the system. His concern is that this the momentum that we're starting to see here, where they're putting new liquidity in, is enough to offset the cut in value of that collateral. But I think my final point on that would be, so at the moment, that's probably not enough, but the market can always look through that to the other side and say, yes, might not be enough at the moment, but we're already starting to see the trends in place that more liquidity is coming. And really, there's no limit to how much they can put in to offset that devaluation of the underlying collateral. So that's sort of the flavor I'd add to that.
So yeah, kind of piggybacking off of what you're saying, I would say that, we have probably what you would call a higher low. Yes. And I'm expecting that this would eventually turn, right? So this is where the current climate is with liquidity. Now, if I'm seeing where things are going to go, I want to show some charts. So some of these charts were made by another community member named Math. And
they're just fantastic, these charts, aren't they?
Yeah. So, I think these were some of Raoul Paul's charts, and then we recreated it in TradingView. And effectively, here where, in the white line is weekly global liquidity year-on-year percentage, and the ISM is inverted, and it's been pushed forward by 15 months. So it looks like it's a decent match. So I guess the ISM is telling us that this should be actually going up, right?
Yeah.
So if we flip to another chart, this one's a bit more confusing, but it has a lot of stuff that, again, Raoul Paul has shared. But basically, again, global liquidity year-on-year is the white line. And then there are three other ones that are here. We have the China Credit Impulse, which is actually pushed 26 months in advance. We have the global manufacturing PMI, which is this pinkish line, which has been pushed 18 months in advance. And then we have the Financial Conditions Index, which has been pushed 4 months in advance. And basically, again, there seems to be a decently rough match to it. So again, these are all saying that global liquidity should be going up. Now, if we look at another one of Raoul Paul's charts, we have the G4 balance sheet, which is the US, Europe, England, and Japan. Their balance sheets are all in US dollars divided by the US M2 money supply. And this white line, which is the G4 balance sheet divided by M2, has been pushed 18 months in advance. Now, is it the strongest fit with the dollar, which is the green line? No, not exactly. But it is kind of telling us that we should expect a downturn eventually with the dollar, right?
Yeah.
Now, if we look at some other charts, which is Bitcoin year-on-year percentage change with global M2, they both seem to be kind of creeping up. Now, there's no projections as to where we're going, but I get the feeling that things are creeping up. And then the final chart
it doesn't necessarily. So
can
you just pop back to that last one, because we don't necessarily need to see a projection of where it's going. What's probably more important there is that we can see a bottom. Like, that's a really clear bottom in place there for both of those, isn't it?
Very true. Very true. Very true. Yeah.
Yep.
And then the last chart, I think, on projections would be the ISM inverted 20 months in advance. Is it the greatest fit? Again, not that much data, but if we were to look at it, we should expect ETH to start going up in relation to BTC very soon, right?
And that tends to happen. ETH going up, that tends to happen when we're really in a bull market, doesn't it? That ETH outperforms Bitcoin. So, so you would be almost looking at that as an indication of that we're absolutely back in bull market territory when that starts performing that way.
Except if you're looking where that's well into 2024.
Yeah.
You see where the line is going. So for me, I look at these charts and data as where I think we're kind of going.
Yeah.
So current liquidity looks like it's bottoming and kind of going back up, right? Forming a higher low. These charts are telling me that, okay, I believe that we're going to continue going up, right? Now, if we're looking at interest payments, this is the chart. Again, I think this was another one of Raoul Paul's charts. The blue line is the US government interest payments, which has been pushed forward 36 months. The white line is the US Fed balance sheet, and then the yellow line is basically the US Fed balance sheet minus the TGA, the Treasury General Account, and the RRP, which is the reverse repo, right? And again, you see there's a good track, and it's telling us that even though these are going, it looks like they're going down because this is on a 3-month view, that eventually this is going to have to go back up because someone's got to be paying these interest payments.
Yep.
And just so that you can see this a bit more clearly, we can look at this chart. So this yellow line is the exact same yellow line here, and this is on a weekly thing, right? So whereas on the 3-month it looks like it's kind of going down, on the weekly you'll notice that it went down all of 2022. But even though Jerome Powell keeps on saying that we're going to reduce liquidity, it doesn't look like it when you look at this. It's going sideways and it's chopping up and down, but it's not going down. So for me, I don't care what people say to me. I like to see the chart and see what's actually going on. And this saying to me that, okay, we haven't gone down and we haven't gone up, but we're going sideways, right? So, and the question is, who's going to be buying all the new bonds that are going to be issued to pay for these interest payments? So I have a chart here. This was from one of Arthur Hayes's articles, where basically he was showing how the net change of treasury holdings since 2019, and this data is all the way to 31st March 2023. And you'll notice that China, Japan, you can include Russia and Saudi Arabia. They're not really buying treasuries anymore, especially when the US did with Russia's US reserves right before or after the Ukraine war started. And it would seem to me that the people who are going to eventually be buying is the Federal Reserve and banks who are probably mandated to buy these bonds. So my feeling is, while it looks like everyone's talking about interest rates going higher and higher, I think they're actually topped and they're probably going to come back up. Could they go a bit higher? Sure. But more likely than not, this chart saying someone's going to have to be paying for interest payments. And according to Raoul Paul, those interest payments are being paid by issuing new bonds. So it's like you're taking one credit card, paying it off with another credit card, and you just keep on rolling it over. So you're not buying, I don't think you're buying bonds. I don't think I am either. So, I think the Federal Reserve is going to do it. So my feeling is interest rates are going to come down and liquidity is going to go up. So for me, I would say that those two things combined together would tell me that the dollar is probably going to go down. That's my feeling. Now, will it go down exactly tomorrow? I don't know. But my general feeling is that's where it's going. Now, one also wants to look at other asset classes just to be sure, because they're all somehow related in some way. So if you look at gold, for example, which probably I can go through a little bit later when I go through the dollar chart, is for me, I think it's actually bottomed. So from an Elliott wave perspective, after you've had a 5-wave rally up, 1, 2, 3, look at the green numbers, 4, 5, usually there's an ABC correction. And you'll notice that we have my A correction, the B. If you look very closely and if you look at our patterns, you'll see that the B looks like a triangle, if you notice. I mean, if I can draw it out for you, where you put this here and this here, it looks like a triangle. From here to here, I mean, that looks like this, right?
Yep.
And this A wave is an impulse going in the opposite direction, right? And this also looks like an impulse, right? So, and obviously I have, these timing clustering techniques, and notice that I have this channel drawn here, and it's bounced off the channel. And if you notice, there's another channel that I've drawn where it's kind of broken off of it, out of it. So for me, I'm cautiously saying that gold is bottomed here. If it gets above above this wave 4, like around here, I become even more confident. And then the minute it breaks over this channel here, I become even more confident. And the minute it goes over this B, I would then pretty safely say 98% say this is the bottom. Yeah. That's the way I would look at it. So for me, we've done the A, B, C, and we're going to start going up. So that's telling me that something is shifting. And this is my signal. Now, we can also look at Bitcoin. So if we quickly look at Bitcoin, you'll see that we had an expanded flat structure here. So again, if I share my chart, this flat pattern is how I'm seeing this. So if you notice, once again, we have our impulsive 1, 2, 3, 4, 5, and that's what becomes the red wave 1. And after that, we've had this very boring, and a flat pattern is usually suggesting that things are just bouncing around. So we had our A wave, our B wave. Now, where we're exactly at, I'm not 100% sure, but if you see that the C wave, usually a C wave will have 5 waves in it. I'm counting it as 1, 2, 3, 4, 5. Now I can go into RSI and how the RSI kind of tells you which way we're in, but let's not get too complicated here. But notice the minute that the price goes above this dashed line, which is the bottom of wave 1, once it goes past it, I'll say that this is the bottom, and I'll say it pretty confidently. Right now, notice that it just went above, and it just went a little bit before, if you look very closely, right?
Yep.
It didn't go over. It didn't close over it, right? So I'm still a bit hesitant. So there's this chance that it could potentially go down. Maybe I've got the wave 2 wrong. But there's other things that I can say. Usually the wave 2 and the wave 4 has to look alike. So for example, if let's throw this out, and let's say this is the wave 4 and this is the wave 5. They say that the wave 2 and the wave 4 should be the same size in terms of size and in terms of price. Look how long this wave 2 is, and compared to how long this is. So this is what in Elliott wave they call the right look, and it doesn't have the right look. So that's why if I put the wave 4 here, now these two are starting to have about the same amount of time, if you think about it, right?
Yep.
So this is why I'm tentatively saying that we've bottomed here and we're going to go up. But notice with my pathways, and just so that everyone should know, like when I draw the pathways, these are not drawn to perfection. I'm just kind of roughly telling you where the direction is. You shouldn't use that as a timing or price technique. I'm just saying that these are the potential pathways. So for me, there's that still low probability that this would happen, but I anticipate that this is kind of going up. And then the reason why I say this is if you go to the 1 hour time frame and you look at what's going on here. So I have 3 exponential moving averages. I have the 50, the 100, and the 200. Notice how it's kind of bounced up and then been rejected. Then it kind of bounced up. It seemed as if it was hovering, and then it went down. Then it bounced up, and then it started kind of batting around in between the moving averages. Then it shot up. Who the hell this was on a, around 11 p.m. UK time, shoving the price up 4% in the space of 6-7 minutes. I don't know who it was, but okay. Notice it went here, and now every time it's bounced, it's vigorously kind of gone off this line. So to me, forget all narratives. The price is telling you something here. And BTC is telling us that it doesn't want to go below this line. Now, could it still go below? Sure, it can. But to me, it seems as if it's busted through the resistance and it's now reclaiming and making the support. That's the way I see it. This is what
you've got a lot of things there, and that's I suppose the beauty of how you're approaching this framework. You're not just looking at any one, you're looking at, you're starting off at that big picture macro view, and then you've gone through the different timeframes and even the different types of analysis to come to this conclusion that your confidence is increasing. You're not saying it's certain, but increasing that the low is in on Bitcoin and gold. But even then, you're only using that as a backdrop against your overall view on the dollar. Is that a fair summary?
Well, I'm looking at the bigger, much, much bigger picture of liquidity, which I think informs everything. For me, that's the be all and the end all. If you can understand that, you understand everything. That's the way I see it. Yeah. The way I see it is more monopoly money in, the more you can play monopoly. If people take the monopoly money out, then people have to, eat ramen noodles and not buy, penthouses on Mayfair or whatever streets there are on the monopoly board. That's the way I see it. I hate to make things so simple, but that's the way I see it. The more money that's in the system, the more you can play with it. The more that's taken out, you don't get to play as much. So
I love that framework.
And then the great thing with Bitcoin is that you can also look at things on chain, right? So
you're adding another layer here where specifically for Bitcoin, you then look at the on-chain aspect of this as well.
Exactly. And this is a level of transparency that you don't even get in the TradFi world, right? You know, you get quarterly reports, and then accountants can fudge around things. Here, you're seeing what everyone's doing because you can parse the data from the blockchain, right? So there's a guy named Crypticon who is pretty much an on-chain archaeologist. And, you know, even though I've gone through all of Glassnode's charts, I find it easier if someone else does it, because managing all these charts become a royal pain in the butt, right? So again, this is Crypticon, and he does all this on-chain analysis, which I don't have time for. So I understand what he's doing, and I find the beauty of someone else doing all this analysis great, because you can only manage so many charts, right? So in this one, he's shown the realized profit. So when you sell, you know, you either have a realized profit or a realized gain, and it's compared to the realized market cap, which is basically the market cap of Bitcoin, not based off of the current value of Bitcoin, but the value at which everyone bought the Bitcoin at. So you might have bought your Bitcoin at 15,000. I might have bought mine at 20,000. They all average it's all out, and you get your cost, you know, buying basis. So what he's showing here is the ratio between these two. Put in a low over here, and it went up and then went down, and you had a higher low over here. This is not as relevant as maybe this one, where again you had a low over here and then a higher low posted over here.
Yep.
And he's making the argument that you have these higher lows being made, showing that people are now having more and more realized profits. And if you notice, we have our low here and a higher low here. So if we look back into history, it looks like this looks a bit promising on the on-chain side, where we might have had our higher low here. Now, another chart that he uses, just so that I'm not relying on one, is the MVRV, which is the market value of Bitcoin divided by the realized value. Again, when everyone bought their Bitcoin at, right?
Yep.
You know, and if you notice, this is the line, the pink line, that's the ratio. The highs are obviously when the tops are coming, and you'll see that the bottoms are kind of over here, right? So notice, again, we have these higher lows being created at different junctures, you know? So he's kind of saying that maybe we have another higher low over here, right?
Yep.
So now this is another indicator called the short-term holder SOPR, which stands for spent output profit ratio. Spent output profit ratio. And basically short-term holders are anyone who's hold Bitcoin for less than 155 days. And basically the profit ratio is, you know, comparing those who have spent and had a profit versus those who had a loss. Obviously, number of one means there's no gain or no loss. Any number under the one, the short-term holders are losing. Any number above is they're actually making a profit. So notice over here, a series of higher lows are being made, right?
Mm-hmm.
So this is suggesting when you have, you know, a higher lows being made, or you could say there's a divergence between this indicator and the price. That's kind of telling you that, okay, maybe the bottom's in. So again, this is another chart. And now another longer term chart is the long-term holders, which is people who've held Bitcoin for longer than 155 days. And notice you're having lower lows on this. You know, the lowest, when the percentage you'll see on the y-axis is percentage of long-term holder supply that's in a loss, right? But they haven't sold. So notice that it's kind of going down. In previous cycles, again, the highest amount was close to the bottom, then it went a bit lower, then it went a bit lower. Same thing over here. The highest loss amount was over here, lower, and it looks like we have the same kind of thing happening here again. Now, is it all exact? But again, I'm trying to triangulate things here, right? And then the last one is the total supply held by short-term holders. Notice it's at the lowest that it's ever been, you know, since the advent of 2011. And usually, the short-term holders are people who are holding less than 155 days. They're not the long-term holders. They're not the ones with the diamond hands. So it's really at the lowest it's ever been. So when you combine all of this together, right, you look at global liquidity, the global liquidity projections, interest rates, who are going to buy. We look at what's happening with gold and Bitcoin, and then we look at the on-chain stuff. To me, this looks bullish to me. Now, can there be a black swan event and then, you know, someone nukes the world and then all bets are off, you know, then obviously you could have the black swan of COVID, and there will be a dip here no matter what happens. But for me, my framework before I go and look at the dollar is that I think that we are kind of going down from here. Now let's use Elliott wave, right? So for me, just to quickly look, just to repeat, we have an impulsive structure over here, wave 1, 2, 3, 4, 5, right? And after you have a 5-wave impulsive structure, you usually have an ABC correction. So for me, I'm seeing that this looks like 5 waves down for me, and that's our A. And so again, let me get okay, now that I've shown you all of this stuff, we can close it. So if you take a look at this chart, this looks like a inverted version of this.
Yes.
And this looks like an inverted version of this. I mean, if I flip the scale here, you'll see that this, if this is the beginning point over here, actually, it's better if I show you the expanded flat over here. It looks like this. I mean, a more complicated version, but look, it goes up, it goes up, it goes down, it goes up a little bit higher, and then back down. So here we went down, it went higher than over here, and now it's going down, right? So that's what it looks like inverted. So for me, when I'm looking at this, I think this overall pattern is eventually going to be a zigzag, which looks like this. Now, could it end up being a flat where, the other count that I have in the back of my head is it goes down like this, goes up here. Oh, sorry, let's not do this. Let's move this out. The one that I have in the back of my head, it kind of goes up, goes down, goes up here, and then goes all the way down. Now, there are many reasons why you can't do this, but putting that aside, this is the count where if global liquidity keeps on going down, if the Fed doesn't buy more bonds, or people don't buy bonds, and the interest rates go up, to 10 to 20%, then okay, maybe this might happen, right? But outside of that, I'm looking at the shape, and I'm saying that this shape looks really like a zigzag to me. So, and notice over here, the C wave of this B wave. So this B wave started over here. We have an A, B, and then this is the C wave. Mm-hmm. And within the C wave, we have, I'm counting it as a 5 wave. Maybe I've got my counts wrong. Maybe the 3 goes here, 4 goes here, or maybe the 3 goes up here and the 4 goes down here, and there's maybe a little bit more. I don't know yet. But again, when you look at the RSI, you'll see that there was a bearish divergence that happened here. And like gold, if you look back to the gold chart, remember I told you about it breaking through the channel?
Yes.
Notice the same thing has happened in the dollar. It's kind of closed and broken through the channel. So to me, I'm cautiously saying that I think we've topped for wave B, and now we're going into the wave C. Now, I've seen some other people's counts where basically what happens is they've counted it slightly differently. So maybe it goes up here, it goes down, then goes up, and then down again. Who knows? But to me right now, this is what I'm working with. The minute this goes down to 4 and goes lower, I build my confidence. The minute it breaks through, it goes below here, I'm pretty sure now we're going into our wave C. That's the way I see it. So again, if I'm looking at things, this is why I said I'm not using the higher potential thing where it goes all the way up here, because I'm looking at global liquidity. I'm looking at interest rates. I'm looking at what's happened to gold. I'm looking at, and that makes me think that when you triangulate all the stuff, even if you look at the on-chain stuff, that's giving me a signal saying, okay, I'm cautiously optimistic that this is going to keep on going down. But once it breaks this wave 4, goes below here, I increase my confidence. And basically, where can I go wrong? If liquidity keeps on going down, and if interest rates keep on going up and no one buys those bonds, then there's a high chance that I'm totally wrong with my count and I have to redo it. But right now, I don't know. It looks kind of, when something looks like and smells like a duck, then you call it a duck. And if it quacks like a duck, call it a duck. So right now, this is the shape that it's looking like. So that's what I'm going to kind of go with.
And I really love that. I love all of that analysis, because to come to that conclusion, you just didn't base it on that chart read. In fact, the chart read's almost the least significant part of the process, isn't it? That's just pulling it together at the end to give you something definitive to work with in terms of positioning, I suppose. But that's not where you come to the conclusion from all of that information together. It's fantastic.
Pretty much. But me trying to write that as a text with all the, it would have taken me a few days, you know. Now, for your bullion group, if we look at gold, which I'm quite familiar with and I've been counting for quite some time, if we just back up a little, let's go to the daily time frame. Notice that my count, I'm not going to go back to the 1970s, you know, so I'm starting from around here. So if you look at, let's focus on the blue numbers, which are the biggest ones in the babushka dolls. I think that we have wave 1 here, wave 2 here, wave 3 here, and wave 4 has happened here. So we're now starting on our wave 5, which will end somewhere around here. Let's not worry about it right now, but it's somewhere there, right? So now if we go into the 4-hour time frame, you'll notice that from the blue wave 4, we have the wave 1, wave 2, wave 3, wave 4, wave 5. Now, here's the interesting thing. At around this time is when everyone started talking about gold again. You know, I started hearing it in the news. So that for me was a sentiment indicator telling me that, okay, a local top is coming. And I kind of used that to say, okay, I think gold is topping here. I thought the top was here. And actually, as usual, gold screwed me over and said, no, the top is over here. So I got it wrong by about $10 or so. So I was wrong, I have to admit. But again, after you wave one,
pretty close.
it was pretty close, yeah. After that, and also notice how messy the price action is. I mean, getting the actual tippy top is not easy to do. It's very hard, you know, and you know, I got faked out and whatnot. But anyways, again, after you have your 5 waves up, you have a 3-wave correction. So notice again, we have, again, this is another zigzag. If you look at it very closely, this is inverted impulsive wave. If you look over here very closely, this is a triangle like this. And then this is another impulse wave down. So again, I used all these time clusters and price targets to, and notice how it bounced off of this sloping channel, this downward sloping channel. Kept on bouncing off of it. And then notice again that we had a downward sloping channel for this impulse down, and it's kind of broken through it. So this to me tells me that, okay, if this looks like it might be going up again. So I believe that we've bottomed on thing. Maybe it goes a bit lower and it hits the support. Maybe I've got my count a little bit wrong. Maybe this is 1, 2, 3, 4, and maybe down to 5. Maybe. But if I'm off by a few more dollars, that's fine. But yeah, that's kind of where I see gold right now.
And either way, even if you are off, almost like that previous example where you're off, you're still very close to, and you would certainly be looking at that as closer to the end of that downward move than the start of it. So that's certainly something to consider for people who are interested in things like gold, and even the same argument with Bitcoin. Trying to fine tune your pick is always going to be next to impossible. I mean, you demonstrated that from that previous example. But if you can enter the market when you're much closer to the end of that move down than the start of the move down, that's really that's the game we're playing, isn't it?
Pretty much. So if you look at all of that information, this is why, and the fact that it broke this channel right now on the dollar, that's my first sign that, okay, maybe we've talked. Again, maybe my count is wrong. Maybe it's 1, 2, this is 3, this is 4, and maybe it has a little bit more to go. Maybe. There's that possibility. But yeah, that's kind of my reasoning, the reasoning behind my thinking.
Look, that's absolutely fantastic. Thank you so much for sharing that with us. I know that, well, I certainly know that the Ainslie community will be very interested in that gold analysis, and I know we just there's so much value in our community, in our Discord community with the Visionaries Club, and you know, there's so much potential there. I really appreciate your time on that today, and I know that community will as well. So thank you on behalf of all of us.
Okay. Oh, and just one last thing for future reference. Like I know I mentioned it before, when I'm drawing these pathways, they're not exact. You know, I'm just
of course
saying what the general direction is, both in time and price. I've just randomly put them in place. It's just so that everyone knows.
It just
I mean,
fantastic.
don't take this top as 110 on the 28th of February 2024. No, I'm not saying that. I'm just saying this could be a potential pathway, you know. That's
I know you say that, but a lot of us will go, okay, the top is in. Tyler's called it. Thanks everyone for watching. Remember, we really do value these. Community is everything. We really do value engagement from the community. So if other people are prepared to share their analysis, it doesn't have to be as in depth, whatever you've got to offer. So if you're you've got a few charts, you just want to share them briefly in a chat, that's fine. Or if you've got that deeper analysis, I mean, everyone always appreciates the deeper analysis as well. So whatever you can bring to the table, we really appreciate that. And I'm always happy to have a chat, and always hoping for more people to put their hand up to go down this rabbit hole. So thank you again, Tyler. And for anyone who wants to engage, just reach out. You can follow on, you can follow me on X, Tipper Analytics, reach out on the Discord or the Real Vision platform, and we can organize something. So thanks again, everyone. And until we chat again, good luck in the markets.